This AI ETF is paying a yield of 34%. This ETF is crushing Wall Street and is getting a lot of hype recently. The yield is indeed 34%. That sounds amazing, but I am here to share with you if it really is all that it's cracked up to be, who the ideal investor is, and help you determine if it belongs in your portfolio. I spent a lot of time looking at different yields, the math behind income ETFs, and focus my content strictly on income and covered call ETFs, so you don't have to. Thanks for watching. Let's roll the intro and get into it. AIPI was launched in 2024, so we've got real performance data to work with, not just a promise. As of June 4th, the yield was over 34%. Now, by June 30th, according to their site, it had climbed to over 35%. It pays monthly, expense ratio is 0.65%, and in terms of assets under management, which I always check, it's sitting on over 366 million. On paper, everything checks out. I also ran a backtest against the S&P 500, and what I found might actually surprise you. More on that in a second. Let's go into the major companies that are held by the ETF. First, we're going to start off with CrowdStrike Holdings at 9.5%, and this is an AI-powered cybersecurity company. NVIDIA, of course, we all know this company. Palantir Technologies is AI software. Astera Labs, which is AI infrastructure, and ARM Holdings, which is an AI chip architecture company. One thing I love about this ETF is that it's very diversified. If I was to compare it, for example, with, let's say, YieldMax NVDY, which focuses strictly on NVIDIA. Obviously, it's a good company, but it's concentrated in one stock. And in my opinion, it's always better to be diversified, and that is the real basic theme of an ETF, is to have a basket of concentrations or a basket of stocks. And in this case, we're focusing on AI companies, just several of them, as opposed to just a single one. So the backtest that I did, first the timeline was September 2025 to June 2026. I put basically 50% in AIPI, the other 50% in SPY, and I wanted to track it against the S&P 500 as a benchmark. One thing I do have to state, though, is that past results are not necessarily indicative of future results. So looking at the performance, AIPI had a return of 18.9%, and it actually beat the S&P 500 benchmark by 1.8%. And that's significant of note. And looking at it from a more granular level, $10,000 were invested in AIPI and the same amount in the SPDR. And the end balance for AIPI was 11,888 versus 11,705. They were pretty close together. But for an income ETF that focuses on providing you with cash flow and that by mechanics is going to be capping the growth, it actually did pretty well and outperformed the S&P 500, which I felt was quite significant. Now, year to date in 2026, that story has flipped. AIPI is down 8.31% year to date, while the S&P 500 is also down, but they're just down 4.33%. So same fund, same strategy, different market, and that's the point I'm trying to make. So AI has been one of the hottest trades on the planet, let's be honest. But hot trades eventually go cyclical. They do go through drawdowns like anything else. So my take here is cautiously optimistic. The yield is real. The yield is really good. The history thus far is good, but if you're buying AIPI, you need to go in expecting turbulence, not a straight lineup. On a future video, I'm going to be talking about a couple of new, pretty novel ETFs that provide income and provide structure that haven't been covered before, at least as far as I know. So if that's of interest to you, please hit the like and subscribe button, as I'm going to be putting that out shortly. And having said this, I recently put out a video on the different types of income ETFs, covered call ETFs, and the link to that video is here. Make sure to take a look at it. Thanks so much. Have a prosperous rest of your week and a great 4th of July.